A Sydney couple just spent $1.6 million on a property. When asked why did they rush in, they said they wanted to avoid the flood of people coming. They saw something most people are missing. And after 23 years of investing in property, I can see it too. You see, I correctly predicted the 2012 Sydney and Melbourne property booms, the 2017 market downturns in those very same markets, and the post-COVID surge. And what I can tell you is that this feels like one of those key defining moments, except the stakes are higher. Our housing crisis isn't getting better. It's getting worse. And while almost everyone's debating, well, whose fault is it? Some people are positioning themselves to build serious wealth. Because whether you like it or not, if you don't act now, odds are you'll pay for it later. For example, if an $800,000 property increases by just 10% in the next year, like it almost certainly will do in multiple areas around the country, that's an extra $80,000 you'll have to come up with in 12 months' time. So today, I'm going to show you what's actually driving this rush to buy now, why the government solution is actually making the problem worse, and the small window you have to get in before prices jump even higher. But before we dive into how people are profiting from this crisis, I need to address something that might make you feel uncomfortable. You see, most people think the housing crisis is their fault. They believe if they just saved harder, budgeted better, or worked more hours, they could afford a home. They think the system is fair and that anyone who profits from the crisis must be exploiting others. But the truth is that our housing crisis is getting worse, and it's due primarily to bad government policy. You didn't create this crisis. I didn't create it. They did. So that only leaves you with two choices. You can either get left behind or you can benefit from it. Because if you think you can now save your way to wealth, I'm afraid that just isn't going to work. You're going to either be left behind as inflation erodes your savings, and if inflation doesn't get you, lowering interest rates will slash your returns anyway. The question is, are you going to let this opportunity pass you by while others build generational wealth? Because while some people are going to sit on the sidelines debating the ethics, here's what's actually happening in the market. Buyers are panic buying right now. The first thing you need to know is that smart buyers, they're already making their move. And yet the most common question I still get is, Nero, is now the right time to enter the market? And look, I get it. It's because investing in property can be scary. It's a lot of money. It's an increased amount of debt. It's often more negative cash flow, at least in the short term. So there's often a lot of fear around buying a property. But the data clearly shows that if you wait, you're going to look back with regret, wishing you bought earlier, because buyers are rushing into the market right now. Despite prices across multiple areas in Australia already being at their highest levels on record, people are still panic buying because they can see the writing on the wall. They know that waiting even 6 months could cost them many tens of thousands of dollars, if not hundreds of thousands of dollars in some markets. So stop waiting for the perfect time to buy. Unfortunately, that perfect time, it's actually slipping away as we speak. So start looking at properties now, because every week you wait, you're potentially adding thousands of dollars to the price you'll be forced to pay. So if you're considering investing in Australia right now, don't do it blindly though. Not every area is going to perform as well. So we've put together a free checklist we use with clients before we approve a single deal. It covers supply traps, policy shifts, and the rental markets to watch. You can grab it totally for free using the link in the description below. Now, you might be thinking, but surely developers will just build more homes to meet this demand, right? Unfortunately, the exact opposite is happening. Supply is actually collapsing while demand is exploding. You see, most people seem to somehow assume that when demand goes up, supply automatically follows. They think the market will self-correct and that new homes will simply flood the market to bring prices down. The truth, though, is that housing supply is actually falling. It's not rising. New data from the ABS reveals that building approvals have dropped rapidly over the past 2 months. We're moving in the complete opposite direction of where we need to go. Now, this creates a perfect storm. You've got buyers rushing in on one side, and on the other side, fewer and fewer new homes being built. It's basic supply and demand, and right now, demand is crushing supply. So when you have more and more buyers competing for fewer and fewer properties, there's only one direction prices can go, and that's up and fast. So don't wait for supply to catch up, because it won't, at least not for several years, and by then, prices are going to be significantly higher than they are right now. If you're serious about buying a property, you need to act while there are still good quality properties at your price point to choose from. Focus on areas where supply is particularly tight, because those markets, they're the ones that will see the biggest price rises. Now, here's where it gets really interesting, because what we're seeing now, it's just a warm-up. We're actually heading for the biggest price surge this decade. You see, most people think that the property boom we saw just after the pandemic, that was a one-off event caused by unusual circumstances, and that we'll never see growth like that again. After all, in 2021, prices rose over 20% in multiple areas around Australia. Most people think that could never happen again, at least not so soon anyway. Sadly, they're mistaken. New data shows that the market is on track to post its biggest uplift in decades, even higher than we saw in 2021. We're not talking about modest growth here. We're talking about dramatic changes in property prices across the country. All of the conditions are aligning perfectly for another massive boom cycle. The demand is there, the supply isn't, and as you'll see shortly, the government is actually pouring fuel on the fire. This is the kind of market cycle that creates generational wealth. People who position themselves correctly right now will look back in 5 years and realize this was the defining moment that changed their entire financial future. So if you've been thinking about investing in property, this is your window. Don't overthink it. Get educated on the fundamentals. Find a good area with strong growth indicators and get into the market before prices rise even further. Look, even if you can only afford one property right now, that one property bought during this cycle in the right area could help set you up for life. But here's the part that should really frustrate you or motivate you, depending on how you look at it. The government's solution to this housing crisis is actually making everything worse. You see, most people believe the government's home buyer incentive scheme will make property more affordable and help first-time buyers get into the market. They've been sold this is the solution to the housing crisis. And yes, there have been some nice feel-good stories in the mainstream media about how young people, first home buyers, have used the scheme to buy their first home. Now, while that might be true, here's the problem. The government's first home buy incentive scheme, which allows people to buy property with just a 5% deposit, that was supposed to somehow make property more affordable. But here's the problem. Even the RBA governor herself has said that this scheme will actually make prices rise significantly. Think about it for a second. The government's solution to make housing more affordable is actually going to make it more expensive instead. How? Because when you make it easier for people to buy with smaller deposits, what are you doing? You're injecting more buyers into an already supply-constrained market. It's not as if we have a surplus of properties out there. Instead, we're going to have more buyers chasing the same limited number of homes, and that can only mean higher prices. It's economics 101. It's not speculation. The very policy designed to help people is actually going to hurt many of them by pushing prices higher. So if you're waiting for affordability to improve through government intervention, you're going to be waiting forever while you watch prices climb higher and higher. So take action now before these policies potentially push prices even further out of reach. And while we're talking about prices rising, as an investor, if you act right now, if you can afford to, there's a second benefit here as well. You see, rents are rising in multiple areas as well. What many first-time investors get wrong is they think that just because most properties in good areas are currently going to be negatively cash flowed, they should wait. What they don't understand is that while prices are rising, rents are also rising as well, though not as fast. But what that means is that whatever property you buy right now, if you buy in the right area, that negative cash flow on that property, it's going to reduce over time. For example, if we look at Sydney, the Sydney rental market has officially entered Hunger Games territory. Recently, there was a video that went viral about a line of people queuing up to pay $800 a week for an apartment in Bondi. And that exposed just how brutal the rental crisis in Australia has become. People are literally lining up like they're waiting for concert tickets, except this is for a basic place to live. You see, the government scheme was supposed to help people stop renting by making it easier to buy. But then, why are rents rising and queues for rentals increasing and getting longer than ever? It's because the policies don't actually fix the housing crisis. They just shift people around. So what this means for you as a property investor is you can get the benefits of both capital growth as prices of property rises and cash flow growth as your rents improve. So don't wait for cash flow to improve on a property before you buy. Do your numbers and buy as soon as you can afford to, because what you'll find is that then over time, your cash flow on your property will improve as rents rise, and your equity, well, that will grow even faster as prices keep rising faster than rents. But on the flip side, if you keep waiting, you'll find that the cash flow position on any property you're looking to buy in a good area in 12 months' time, it'll be even worse than it is right now. Why? Because prices would have risen significantly more than rents. So hopefully you can see that waiting, it'll only hurt you in multiple ways. But of course, that doesn't mean you can just buy anything and buy blindly. There is some practical research and due diligence you need to do. So if you want more than just theory, if you actually want a strategy tailored to your situation, then book a call with us. We'll look at your goals, your price point, and the markets around the country where we're seeing the strongest upside. The link to book a free consultation is in the description below. So hopefully you can tell this housing crisis, it isn't going away. It's been created and fueled by the very policies that were meant to fix it. And investors who understand this can position themselves to win while everyone else gets left behind. But here's the bigger question. If the government really wanted affordable housing, why are we in the worst crisis on record? Well, in my next video, I'll show you why affordability, that was never truly the goal, and what that actually means for the market in 2026 and beyond. You can watch that now.